So, one of the biggest questions that I get asked as an SBA loan broker, SBA loan consultant is what exactly is it that we do other than just go out and shop for different banks? First of all, we really don't shop. That's not our focus. There are brokerage firms out there whose day to day is just calling as many banks as they can, which is great, but it also ends up a lot of times with false term sheets or deals that get retraded in underwriting. And that's just not how we like to operate. So, what type of value do we add to a deal? What areas can we focus on or help in that really change the outcome of these projects? Truth be told, it is the hardest question for me to answer because every project is different. Just recently, we were closing on an old general store, grocery store, convenience store, not a gas station, up in rural Michigan. And the buyer, she's lived there her whole life. She's been to the store before. She loves it. She's got a retail management background, and she's buying the store. Things are moving along pretty swimmingly. We hit some roadblocks here and there, but in particular, we get somewhat close to closing, and the seller sends back a redlined bill of sale. And it was just the most asinine thing I had ever seen, stating that he would not admit to having clean title on any of the assets. He would not admit to clean title on the equipment. He marked through some just really boilerplate language, just like buying a piece of real estate, buying a building, just the most simple things. And the attorneys couldn't help to calm him down. It was really wild. And so I took it, read through the email chain, talked with the buyer on what she had heard, what she had seen with this particular seller. I had talked to him a couple times throughout the process, but he was really pretty reasonable. And so what it came down to is, like it always does, emotion. He was worried when they sold this business. Their plan was to move into another business in a neighboring state. They were actually buying a farm property. The closing on that was getting delayed and emotions were high. So I put together a quick email, had a phone call, and within 30 minutes, maybe an hour, he could breathe. He was understanding of what the document actually meant. I'm not an attorney. I don't pretend to be an attorney. Simply being able to explain in layman's terms, this is really what this document is trying to say. And this is all that this means. I do advise he should probably get his own attorney to read through and give their opinion on it, but that's not up to me to decide. I can make suggestions, but ultimately, he sat on it over the weekend, and by Monday morning, he shot me a text and said, ready to go. So, like things like that, I couldn't tell you that was going to happen. First time I talked to this seller, he seemed very reasonable, very on board with everything that we were going to need. And then out of the blue, this kind of came up and we had to jump on it. I had another project where the buyer is in South Carolina and there were past due. I had another client where they were purchasing a restaurant and we found out a couple weeks before closing that the seller had an SBA EIDL loan, EIDL disaster loan. It had gone bad. The seller defaulted on their SBA loan, which doesn't affect our buyer, but we did have to figure out how to pay that debt off with the sale of the business. And so I spent several hours on the phone one day talking to various SBA departments, various the disaster loan servicing centers, and ultimately found again a solution. Here's how this works. It doesn't happen every time, but I'm jumping in, spending my time doing things that sometimes a bank, they're not, it's not that they're not allowed to do it necessarily, but it is somewhat of a conflict of interest if the bank is making calls on behalf of someone selling a property or a business. They're lending the money to the person buying it. So they really do have their hands tied a little bit in some situations. But as a consultant, a broker, a third party, we can go out and call whoever we need to. We can try and make whatever needs to happen happen. And that's just something we really can't outline up front because we don't know what's going to happen. Nobody does. So if you're on the fence about reaching out to SBA Loans HQ or any other SBA loan brokerage or consulting firm, I highly recommend it. If you're going straight to one bank, you get one bank's opinion, one bank's answer, one bank's process, and it may not be the right fit for your project. Some firms charge upfront fees. We don't charge any application fees, nothing upfront. A lot of times we don't charge any fee just for recommending a bank or connecting you with them because we get paid from our referral partners. If we are doing additional consulting or business planning, helping you set up insurance, licensing, that kind of thing, we do charge for that. That is all agreed upon upfront and paid for after the fact. Nothing upfront. Go ahead and reach out to SBA Loans HQ. Go straight to the website. There's pre-qualification form, contact form. Shoot me an email, ask@sbaloanshq.com, or give me a call or text, 205-922-7227.